Hey, hello, this is Martin from Secrets, the channel for learning about trading and investing. Welcome to Markets Next Week, the weekly stock market analysis show where we look at technical charts and try to understand what happened in the market during the day, during the previous week, and then plan for a bit of trade for the upcoming weekend. This is for tomorrow, beginning from tomorrow, that's June 17th, Monday, 2024. Let's get on. We'll have a look at the charts and then we'll come back to a summary page. And this is a weekly view. As you can see, it's rounding patterns and flag breakouts. It's cup and handle and flag breakouts, multiple, more than dice, you can see that. So it's an ongoing bull rally. And we're at the very peak on the top. Another view which shows that there is a trend line within which the market is moving on both indices and trying to relax behind a little bit, but yeah, the rounding cup and handles and flag breakouts are seen, and so market is steadily rising up on a medium term. This daily view, the last one that you see is a parallel trend line channel which got dropped from the election volatility, and then once again market recovered completely and then heading towards the very top of the channel. At the top, heated up. Candlestick view. Look at that previous week's candle, the mega fall and mega recovery. The huge volatile hammer is there, which could have acted as a bearish pattern, hanging man kind of, but didn't happen this week, and market further moved up and sustained at the top after the first week after the election volatility. And Banknifty also managed to close above the previous week, but still is an inside bar, and the full recovery is yet to happen above the election weekly candle. So there is a slight lag behind there, but it's a spinning top. Spinning top is not at the very exact top, but still it's a small body with equal wick size on the top. It's could turn out to be bearish if the price moves below the candle's low, but otherwise it's inside bar. It may be consolidating until that price fall below the low of the candle happens on a week to week basis. But on the Nifty, it's again a green candle and nothing specific. Market is steadily going up, and the daily is telling us a lot of things. Till candlestick for Friday is showing its doji and its indecisiveness. And if you look at all the 5 candles of previous 1 week, each day you can see it's a small body mostly, which pronounces the indecisiveness, and it's a bull trap as well. That can be seen. 4 of the candles are bull traps in the 5 trading days of last week, so that indicates profit booking from the top. So indecisiveness is all small bodies are indecisive. So bull market is it's indecisive. Bull demands, contrary to what the price action is saying, bull demands are expanding on the upside, which indicates market will further move up. This is the daily charts that's shown, and it's for the Nifty and the Banknifty both. It's expanding with the bullish bias because it's above the median. Bull demands indicate up move. So we'll come back to support resistances, and before that let's wind up. So previous week was 185.6.80, less than 1% of move, and around less than half a percent of move in Banknifty. 204 points Banknifty, 185 on the Banknifty. So Nifty is close positive, Banknifty also close positive, and market has managed to move, and Nifty did make a new all-time high and formed a bullish candle and close positive, less than 1%. As I said, 40% rally is what's now. Multiple breakouts from the cup and handle since last 1 year. Banknifty is 32% rally with only 10-11% of correction so far. Cup and handle and multiple rounding patterns. Both of them have closed above the weekly exponential moving average, and Banknifty also did not have a full recovery yet, but it managed to close above and sustain the previous election week's fall and recovery. It sustained to close above that, and then it's formed an inside bar to indicate some kind of consolidation here ahead. So Nifty close on the daily basis on the Friday, you see it's flat, less than 0.3%, and 0.3% of the Banknifty. Flat positive, you can say, with industry doji candles, but still more than about the 20 exponential moving average. So it's amount of indecision is all that the charts are saying us. Small bodies are indecisive, so all the previous videos. It is a combination of indecisiveness and the profit booking at the very top. Market is heated up. So we managed to close buy out, but you have to be cautious is what it tells us. But maybe worried about this coalition government like the one decade of previous week, and then it may be watching closely, the upcoming events of how the ministry is functioning and the budget is planned, right, which is coming the next month. So until then, this may continue is what we'll have to assume. Big moves would lead to profit booking, and then this you at the very top will continue till another 1 month or so. July 22nd is what the budget is expected as of now. Rates are not sure. And once again, bullish demand indicates upside. So market has moved up, definitely close positive, but daily charts are very indecisive and trapping the bullseye at the time, and it's heading upwards with bullish demand. So it's a combination of bullishness with indecisiveness at the very top. Let's try to see the support resistances for the Nifty and the Banknifty. So all-time high is at 23,481, just a few points below 22,500. So first resistance will be there because it's around a number of 23,500, and after that it can go as high as 24,000 where the resistance may come in, but 23,500 after that 23,600, 23,700, 800, and all these are rounding numbers. 23,900 as well. So we could feel the resistances. So the outside volume. So breakout from here would mean a breakout from the trendline channel inside one, and it may be heading to the top of the trendline channel on the outside, a very long one, and that could be top at 24,000. So that's what was resistances on charted trajectory, right? And downside 22,930 is where the 20 exponential moving average. 22,930 is very close to 23,000 big rounding number, so that zone can give good support. Once that is breached, it's 22,621 is where the 50 exponential moving average support will come in. Fibonacci retracement will come in at 22,500 nearby zones, so 22,400 as well. That's why the Fibonacci exactly comes at 23. 100 exponential moving average support comes at 22,205, and Fibonacci 38 comes in at 21,700 nearby, and then 200 exponential moving average is way down at 21,300 nearby zones. That's the downside supports for Nifty. And if you look at Banknifty, the first resistance has prices managed to close above that Friday. 50,000 is a big rounding number, so holding that will be the first support downside. And the resistance above that will come in at 50,500, and then 51,000 and 51,133 have the all-time high. That resistance will be there, and that's also confronting the 51,250 where the top of the trendline channel may come in. So resistance could come in definitely at that zone. So 51,500 above 51,500, 51,300, 51,200, 51,100, all 51,000. All these are severe resistance zones. And that if it marks sustains, it will be a big breakout, and then it could be a big rally. But most likely market may face resistance heats and then make a retracement from here towards the median or the middle of the trend or the parallel channel. Middle of that, it may retrace as low as 50,000 once again, or 49,000. That kind of retracement could come in towards the 20 exponential moving average. The further it moves away from the 20 exponential moving average, more the chances that it can fall into that. So gotta be cautious. So resistance for the Banknifty is clear. Downside of the 50,000 is breached. 49,200 is where the 20 exponential moving average is coming. That's where the support is, and after that 49,000 rounding number is support zone. And if that is breached, then it falls to 48,541 by the 50 exponential moving average seen, and 47,800 is where the 100 exponential moving average comes in. So once that is breached, 48,000 big rounding support, and then 200 exponential moving average comes in very bottom down at 46,640, having 47,000 in between also after the 200 exponential moving average is breached. That supports the Banknifty. It's more. Momentum is bullish definitely in the medium term, but the short term Banknifty is in trouble because it's still unable to climb over the RSI 60, while Nifty is sustaining that and then lying low there, right? So momentum is good so far, but it's the Banknifty that's creating some trouble, right? And with respect to the trend indicator ADX, it's still bearish in most of the time frames on both indices, so it has to cross over to the bear zones. Bearishness is rising, they give the Banknifty it's a falling nature from the trend strength in the Nifty. But it's all DMA negative zones, not cross over to the bull zone. So the trend in the short term and the medium term is not doing good, especially in the Banknifty. It's not that great. So that's something to be cautious about. And yeah, otherwise, when the trend is picking up, we can say, right? It has not gone really bad. It remains more or less the same as it was last week. Coming down to the volatility index, the fear and greed index, India VIX, it is further falling down 24% and falling up to 12.8, low also reaching once again 60% crash after 125% of spike up in a few weeks' time. That's the election volatility and the volatility crash that happened following that. Implied volatility is not that great for the option sellers because of the fact that the heavy percentile is 58 and the spread difference between the implied and realized volatility is not that much from favor. It's minus 58%. It should be plus 58 for something in favor of the option sellers to come in, right? So it's not happened so far. Moving ahead, if you try to understand the open interest matter, then if you're showing long build up and Banknifty also long build up, that's for the futures contracts. So that's bullish. Interest for the options of June 20th and June 19th Banknifty weekly expiry is showing that it's bullish. 1.31 PCR put call ratio and almost there at 1. Not bullish enough, but just on the borderline bullish, as you can see, because of Banknifty, right? So options and futures are not telling any bad things. It remains bullish. Let's see the levels. So options Y for the next expiries when Nifty, the Banknifty, the levels for the maximum put and call writing is seen and listed down here. The first support could be seen at 23,400. Highest put writing is seen there, and then the highest resistance is coming at 24,000. Second level of highest put and call writing is at 23,000 and 23,500. So it's an area of 600 points range where the market big players of option writers are seeing for the next week expiry. Banknifty, it's 50,000 and where the highest put writing is seen, and 50,000 the same place where the highest call writing is also seen. So big fight is going to be there at the 50,000 zones. Very narrow tight range on the bank seen for the next week. Right, so we still have 4 more days for the expiry. Things could turn around. Put call ratio and options are we already seen it's in favor of the bulls. Let's try to understand what does the industrial sectoral analysis basically say. So it's not that great for IT and the metals because it's 1.7% down for the IT and flattish, less than 1% of up more on the metal. So it's sideways in the weekly. So weekly and the daily, both of them has to climb into the bull zones first to take long positions. So let us stay away from those two sectors for now. But otherwise, auto sector, pharma, FMCG, reality is all as bullish as it was last week because it was only the SMCG that fallen down 1% down, but pharma, auto, and reality has done extremely well. Reality 6.6%, all-time high levels, and 2.76% auto, and 1.6% up on the pharma. So all of the sectors, auto, pharma, FMCG, and reality are ready to take long positions because they are in the bull zones with respect to both time frames, weekly and daily on the sectoral indices. So in fact, there is a gap bullish kick or gap up is what has happened on the auto, the pharma, which is extremely bullish. But try to see the charts and just understand more. So the ITC is having a cup and handle. It has taken a support of the RSI 40 and then bouncing up, and it looked like it was breaking out, but there seems to be some resistance out there because but otherwise momentum is catching up, but sideways, still not ready for a long position take. Metal is extremely bullish on the medium term, but the short term it is still not recovered from the fallback of the election. And to the very top, we have to be cautious. Auto index at the very top breaking out extremely bullish. We have to be cautious. Nifty breakout will begin from the flag pattern, and moment is bullish, trend is bullish. It is at the all-time highs. You have to be cautious. FMCG has finished the consolidation and is broken out from the box pattern, and that moment is trying with the bull zones in the medium term. Trend is also bullish, so you could take long positions. Could go further up FMCG, and there is negative divergence. You have to be cautious, but momentum is retraced and then climb back. It has got to go at least till the top of the trend channel. It's a weekly things that we're talking about. Reality is also something to be cautious about. Extremely bullish, but there's negative divergence on the weekly at the very top of the trendline channel. Breakouts, all-time highs, and momentum and trend both in extreme bullish zones. Caution. Index heavyweights is other stocks that contribute maximum indices. If you try to see, HDFC Bank is heading towards the all-time highs of 1,700 plus, and it's a green close, and momentum was just managed to climb over the RSI 60 and closed. So that's bullish. First time HDFC is in the bull zone, so for a very, very long time. It's giving coming to the IGC Bank, which was the only stock that was holding the bullish push momentum above the RSI 60, but this time it seems so it's sliding slightly below the RSI 60, trying to be slightly cautious because there is a chance it can go to the bottom of the trendline channel. Right, but HDFC Bank is where the money is flowing, and looks like Lions on the top. It's a flag. It's in brim of a flag breakout. Momentum is climbing back in the bull zones. There's no few divergence on the weekly. I'll be cautious, but yeah, if the breakout happens, it can go towards. It can make another 100 points easily towards the top of the trendline channel. Right, but more in the bull zones for Lions and HDFC bull zones, and slightly sliding down ICICI Bank, and IT stocks were not doing good last week. Pull back, right? Momentum persisting from the INFI at the RSI 60 zone and reversing. So it is consolidating for a long time and still continuing below that. TCS was brim of breakout, but resistance there, and momentum is taking resistance before the RSI 40 and RSI 60, and then turning reversing down. So it continued to consolidate in the sideways momentum. IT stocks, both of them, INFI and TCS. Kotak Mahindra Bank was recovered after the earlier fall and then continued its sideways journey. And FMCG is facing resistance, unable to break out of that flag pattern, and then momentum has found sideways and consolidating. So it's a bank stocks, HDFC Bank, yeah, that's holding the key, and Lands and ICICI Bank was also doing not that bad. ICICI Bank is got some heat, so resistance heat, so some carefulness has to be there. But otherwise, all the other major heavyweight stocks, IT stocks and Kodak and ITCs is starting to get in the bull zone. So you don't have too many bullish out of this 8 heavyweight stocks. We don't have too many in the bull zones except for the HDFC, which just managed to climb back into Reliance also. Apart from HDFC and Reliance, that's holding the market as of now. Others have to catch up, right? But none of them are the bear zones, is the positive thing about it. Look at the mid cap and the small cap index. Mid caps is breaking out at all-time highs from the consolidation previous. Small cap also all-time highs, breaking out from that consolidation. So extremely bullishness. Remember, there is negative divergence on the weekly. You have to be cautious. It's all-time highs with a divergence. You have to be cautious. But yeah, it is across the caps movements. Broader market movement is what you're seeing, is what is confirmed from these two indices of the mid cap and the small cap indexes. Institutional participation, that's turned out to be positive this week when the Fyers sort of buying some. So 2,000 crores of buying. Yes, continue to buy 6,300 crores of buying. So overall net buying for the Fyers and the institutional side was very positive last week. But overall Fyers are still in the selling mode mostly. Right? If you consider the last 3 or 4 months, so at least for the last 2 years, it was more of selling that was happening, and this year especially it was heavy selling for the Fyers that we have been seeing. So that way it's not positive, but looking at a week of green from both institutions is a good thing. So net longs are moved up from the FIDs last week from the derivative side also. That can be seen in these numbers that's seen here. But the FNO data for the FIs is not showing, it's showing indecisiveness in the case of options and the futures. And from the client side also, it's bearish view that it has from the FNO side of the derivatives. FNO side of the FIDA participation basically here. Moving ahead, we'll try to understand how the global markets are doing, how the global commodities like gold and crude oil is doing, and then how currency is doing. So currency, the dollar index is consolidating in that box for a long time. It's more 0.5% last week, and it's 105.52. Dollar markup is not that great news for us, for markets basically, but it's sideways and rising up right now. Remember, it had made a 2.5% down movement. Basically, it's consolidating in that zone. It's a cup and handle breakout zone, so if it breaks out, then we have trouble. But as long as it consolidates within this narrow range, it should be fine. USD currency pair is also slightly moved up, very flattish close of 83 pound high. It's been centrally managed, and it is neither falling down from that ascending wedge nor breaking out of that in that zone because it's centrally managed. So it remains to be weak as before at 83.52. Now crude oil has spiked up 4% this week. It's 78.44, but still it's okay. Its trend line is not breached, and neither is the top of the 10 parallel channel is breached, and so it's sideways, so things should be okay. Gold is once again spiking up after some retracement. 26% of breakout had happened to the all-time highs earlier. Some retracement came in after that. So this week we have a 2% up once again. So gold, when it is trying to make new all-time highs, we had to be cautious of the fact as to if the market is ready to fall down. That worry naturally comes in because gold is a hedging instrument. Gold is a safe haven for long-term investors in hedging. So you have to keep that in mind. But otherwise, no major cues yet from the commodity side and from the currency side. But the US markets is mixed bag. Dow Jones is falling down less than 0.5%. Right? Dow Jones is not doing that great, it's still consolidating, but Nasdaq has broken out big time, and S&P 500 as well. So it's a mixed bag from the US markets. So Dow Jones down, Nasdaq and S&P 500 big time breaking out of consolidations. 3.5% up move and 1.5% more than that up move breakout from the consolidation. But a breakout, it may be waiting for the next Fed news for this breakout to happen. Not sure, but or probably it may follow the other indices. But excellent as it for the Dow Jones, Nasdaq and S&P 500 is breaking out of consolidation at all-time highs at the very top. That's also not bad news for our markets. So overall, commodities and dollar index, commodities and currencies and US markets are not giving too much of a clue of bad news anywhere as of now. It looks like it may be in favor until things fall apart. That's it. So the new two stock picks for the next week. One of them is India Hotels. It's a Tata Group company, and it's in a hotel business, and you can see that it's trying to break out the consolidation zone and then move towards the top of the trend channel as possible. You have to be cautious about this divergence that is there, but volumes, trend and momentum seems to be in favor, and it will be giving 1.5% of RiskReward easily. Right. Cipla, pharma sector is also doing good. A little breakout that has happened from the inverted head and shoulder, and then it consolidated violently. And once again now it's breaking out of that, and then 1 to 2 RiskReward is possible because the trend has climbed into the moment in the bull zones, and it points are okay. The momentum also climbed in the bull zone, but there is a negative divergence. You have to be cautious. Have tight stop losses in both, right? So India Hotel is long, Cipla long. One is the pharma sector, other is hospitality. India Hotel is Tata Group company, right? Swing trades are only for just 1 or 2 weeks. After that, you have to exit. Right? And it has to have tight stop loss, as I said before. Another action level for the next week is a pair of weekly Nifty options trading strategy, and this is a fully hedged Batman, where we have 2 inside hedges and 2 outside hedges, and then you sell OTMs for OTMs. Here we have sold 23,750 and then 23,250, and we have taken inside hedges at 23,750 and 23,150, and outside hedges at 23,700 and 23,850. POP is not that great, probability is not that great, but okay, RiskReward is good. No, not about adjustments. If it breaches, exit and it's at the top, exit. Don't wait for the last day. Completely risk reward, very low margin requirements. Portion size increase as per your risk appetite and capacity. Right, so completely hedge, risk reward, decent risk reward. No, we have chart of the Nifty options weekly strategy is what we're seeing here. That's it. Let's just try to wrap it up. So market hit new all-time highs once again. This just inches away from the 23,500 after the peak election volatile, big violent moves last week, the first week after the elections drama. But it has there is some indecisiveness elements with respect to the close, and market did move further up, but there is resistance, there is profit that's happening. So there is indecisiveness as well. So yeah, banking index is slightly lagging behind, probably it is waiting for the election and the post-election budget first one that happens. And it is still holding above the 20 exponential moving averages, and rally is extended now to 40% in the case and 32% for Banknifty. It's trying to bucket what's in favor of the bulls and what's in favor of the bears. So that goes over the 20 exponential moving average is good. Week's cooling off is good. It's expanding upside on both indices is really good, and sectoral indices, none of them have lost the momentum below into the bear zones, and heavyweight stocks are also like the sideways are bullish. Crude oil risen up but not bad, still sideways. Use market Drawdowns is not that doing great, but S&P 500 and Nasdaq is breaking out of the consolidation zone. Mid cap and small cap indices we have seen breaking out all-time highs, and put call ratio is bullish on oil. Of the options, and the futures as well, it's bullish in nature. So what's in favor of the bulls is the fact that the indices are not climbed in the bull zones, both of them. And it is still lagging behind this momentum, and for the trend, both of them are lagging behind both indices. Prices at kind of a resistance zone. If you consider the top of the trend line channel, there is indice close, and there is Banknifty PCR. Operator's PCR is not bullish, then it's just falling short of the one. And it also is not fully, recovered. It still has the resistance at 51,000. You have to keep that in mind. Fyers did well this week, did well in the sense that close and close the board, but overall, if you see, they're mostly in selling mode. So these are all factors that goes in the bears bucket. Now, as I said before, it did manage to close higher, but it's indecisive, and there is profit booking and resistance due to that. Banking is not doing good. That's summary. So market may be indecisive because of the fact that there is budget that's coming in, and it's a coalition government. So things are heated up. It's at the very top. You could expect consolidation for the ahead. Corrections could come in anytime, right? And be prepared for that. So extreme caution has to be done if you're taking long position on the upside. You have to cut short the position size basically when you're trading, even if you're going long, right? Have tight stop loss. So technically, market is managing to sustain at the very top, very top, with some indecisiveness element that has come in the last Friday. And my view still mildly bullish, just mildly bullish, because Bollinger Bands are expanding and shows that we may continue to do that unless it gives a signal that it's not expanding. Then only I will change my view. And yeah, my view is not just on the Bollinger Bands, but on multiple factors. Your view could differ. The facts are in front of you. You can decide. It's my view. So as I say, always be careful about expanding events like Russian major global cues, Russian fears, inflations, and war, and COVIDs, and all this can screw up the technical analysis anytime. Black swans don't listen to the technical analysis, just like how we have seen when it happened in the elections, volatility. So if questions about that, all that we can do is hedge your positions at the portfolio level, hedge each of your positions if it is carried forward overnight, and have tight stop loss centrally. So as long as the 23,000 and 22,500 and 28,500 is maintained on the indices, we may be prepared for the continuation rally. Right, for the next week, maybe 23,000, 23,800 on the lower and upper side on the Nifty, and for Banknifty, 59,000 and 51,000 maybe the levels that we really have to look out for. Right, that's all I have. yeah, if you like the analysis, if that helped you in any way, subscribe and then like and put in the comments and share it all. Yeah, I'm active on the other channels listed here, so click on those links and then subscribe for you to have more number of updates on the market before this weekly analysis that comes in, right? That's all. Thanks for watching. Happy trading, happy learning, happy investing. Bye bye.